Hey everyone, welcome back to another XForceGlobal channel update. Today we're diving into a topic that's on every crypto investor's mind. When will the Bitcoin bubble pop? And more specifically, why 2025 or 2026 at the very latest, in my opinion, could be the year that it all comes crashing down. I've been a bull for the past few years, and I am now finding clues that we may be finally transitioning to a bear market when looking on the overall macro structure. We'll be using the Elliott Wave Theory to analyze this, focusing on two key scenarios when zoomed in for this possible fifth wave that I narrowed down that more or less has the same end results and arguably the same target zone for both of the scenarios. Plus, we'll explore the market psychology behind these moves, so let's dive right into it. But before we begin, please make sure to hit that like button and also subscribe to the channel if you haven't already. If you would like more content like this, your support means everything to me. Thank you very much. So first, let's break down the Elliott Wave Theory very quickly for those who might not be familiar with it. The Elliott Wave Theory is a technical analysis framework that suggests markets move in predictable wave patterns, and these waves are driven by investor psychology, alternating between basically a optimism and a pessimism phase. And in a bull market, we typically see a 5-wave impulse to the upside, where waves 1, 3, and 5 are the upward moves, and waves 2 and 4 are the corrective moves that move against the main trend. And each of these waves do have a distinct psychological reasoning behind them, where wave 1, for example, the initial move upward, it's sometimes often referred as the kickoff stage, and then we have a wave 2 of a pullback. It's pretty often deep in nature, and then we have a wave 3, which is usually the longest and the strongest upward wave, and then a wave 4, it's a standard correction, typically sideways, and then we have a wave 5, which is the final upward surge, which I believe we're currently in, and it's driven by hype and FOMO, or fear of missing out. And then after wave 5, the market typically experiences a very sharp or dramatic reversal, leading to a significant crash, and I believe that is going to be the next stage. But we have to figure out how to map this out and find all of the possible evidence that we are in even if wave 5. So we have to apply this to Bitcoin now. We have to do a top-down analysis. Where are we currently on the map? If we look at Bitcoin's history or price history, it's clear that it has followed the Elliott wave patterns of 5s and 3s remarkably well. The history shows that Bitcoin has gone up in 5 waves and followed by a bear market, with each cycle that has been observed in some kind of 3-wave corrective pattern to the downside. And you can see those are all the bear markets that you guys are familiar with. And what is unbelievable about this is that it has worked out for the past decade or so. And more importantly, like I said, the Elliott Wave Theory works on market investor psychology. For the past decade or so, the best calculated way for how the markets have decided price action was based on these halving cycles, as you can see by these vertical lines here. So the most important thing that we can get from the Elliott Wave cycle of 5 waves and 3 waves is that it doesn't care who you are. It doesn't know you exist within the markets, but it does set the blueprint on when there will be a massive correction or not. And the Elliott Wave Theory essentially does not care about the fundamentals and is only a byproduct of these certain waves. So we can just say that the news can act as a catalyst or increase pressure of the overall direction, but it won't be the main causality of how these cycles work. It's just based on the eventual exhaustion within these fifth waves. Right now, Bitcoin appears to be in that wave 5 of a larger wave 1 of a higher degree, and this is the final wave before a major trend reversal like we've seen in the past cycles. Now, in this video, we're not going to focus on how to construct, or how we constructed rather, these waves 1 through 4. And all of the work has been done, but we are going to be focusing on how we can construct the fifth wave. That's the most important thing, the fifth wave, because right now I am starting to see signs of a major reversal for this year, or at least 2026 at the very latest. And I'm trying to warn everyone that this is a very high possibility. So why 2025 or even 2026 at the very latest? Well, if we look at Bitcoin's historical cycles, each bull run has lasted roughly 4 years or so. The last peak was in 2021, which puts us right at the next peak around 2025. And if you combine that with the Elliott wave structure, the timing makes sense, especially if you have a 5-wave structure that's already starting to form. And wave 5 is where things get very interesting. This wave is typically driven by euphoria and irrational exuberance, and this is what we're also observing right now. So as you can see, there's a lot of evidence right now, not just from an Elliott wave perspective. Market psychology wise, we are seeing such high irrational exuberance being observed right now. now. And you guys are all very familiar with the Wall Street cheat sheet, right? As you can see here, I believe that we are in that thrill or that euphoria phase. People are usually typically blinded the most, and without a doubt, people are going to say in the comment section that they're giving insane targets or even say things like this time is different. That's exactly how the thrill and the euphoria phase is designed, and the Elliott Wave Theory's fifth wave does a perfect job of also portraying that. And again, we've already seen signs of this in this current cycle: mainstream adoption, institutional investments, meme coins, and even countries like El Salvador adopting Bitcoin as a legal tender. And now with the Trump administration, no matter how pro-crypto of an administration it may be, it doesn't matter, ladies and gentlemen. With or without Trump, these fifth waves still give us a possibility of a larger correction pullback no matter what. And that's why we have to be very careful. And again, we've already seen signs of this. Like I said, the mainstream adoption is going to be the key thing here, and we're already seeing that in this current cycle. And we have very clear signs, again, with the current waves, right? Waves 1 through 4 are also in place, in my opinion. I think that, it means that if we're adhering to the 5-wave structure like we've seen here, it's quite objectively clear that the end goal can be seen by most Elliott Wave practitioners studying the Elliott Wave theory, that the 5th wave is pretty much the highest probability here at the current stage. And you can see here, if we do have 4 waves being complete already and we're in that 5th wave, we're very close to possibly concluding this on the macro scale. So that's the macro, ladies and gentlemen. Based on all the current data given with the history and all of that so forth, it's objectively clear that we are in a 5th wave of some sort, of whatever degree it may be. And right now, the best way I can divide this overall is by creating a series of 1-2s, no matter how subjective that may be in that sense. But what's important is, if we're going to be dividing this current degree, there is a very clear 4th wave now being complete, and that 5th wave is now that current conclusion, in my opinion, that could be ending this bear market, or bull market rather, going into a larger bear market this year or in 2026. So we must now focus on how this 5th wave is going to conclude. That's going to be our main objective goal here. And this is where we now have to zoom in into the local time frames and see how, if this local time frame can puzzle into the larger macro structure. First, let's zoom into this area over here where there's a 1, 2, 3, 4, 5. We want to be working on making sure that if there is even a 5-wave structure being built. So if we zoom in, you can see here, this is that last 5th wave. Like I said, we have a wave 1, 2, 3, 4, and now we may be working in that 5th wave to the upside. And in my opinion, ladies and gentlemen, I think there is a very clear possibility that we are now in that 5th wave in itself. And then, most importantly, if we zoom in even further, there is another 4th wave now that just might have been completed, and we may be working for a 5th of a 5th of a 5th of 1. So that is very, very, very highly conclusive to me personally, that we are now entering what could be that final thrill or euphoria phase. And I think we're still observing it right now. We've had phases where there was very bullish moments, and right now this is also possibly that final conclusion of that. And we are going to finally see some market exhaustion that's going to be observed in 2 different scenarios when we zoom in even further. So we have to zoom in even more, and we're going to boil this down to 2 scenarios that I believe is the highest probability. So if we zoom in and we go into even that 5th wave of that 5th wave, as you can see, we are possibly observing what could be a 5th wave to the upside of a 5th wave, like I said, because all 5th waves, no matter what degree you're in, is comprised of 5 waves in itself. So some people are focused on too much of the shorter time frames, but it is what it is. You could be a bull in the shorter time frames. That's why I've been saying that we are in a bull market phase of this last phase. It's just a matter of how you're seeing it on which degree and which respect that you're seeing it on the macro. You may be already out of your positions right now if you're seeing a possible larger macro correction that may be happening this year. So this is the first scenario. It's just a clean 5-wave impulse of that 5th wave. Remember, this is the final 5th wave of that 5th wave. In this case, wave 5 is observed as a 5-wave in itself, and this move here is what we're trying to focus on and how this is going to conclude. So that's how you construct the 5th wave. This is where the FOMO, or fear of missing out, reaches its peak, like I mentioned. Retail investors pile in, media coverage goes mainstream, we're already observing that, and everyone starts talking about Bitcoin like it is a sure thing. Does it sound familiar? Absolutely. That's because we've seen this exact same type of movie basically before in 2017 and 2021 when it was arguably even more at peak euphoria at that time. Right now, their markets, in my opinion, are arguably smarter. They're just trying to leech out the dumb traders as much as possible. So in my opinion, I think that we are going to be either working as a 5-wave move in itself for that 5th wave. We're going to be focusing on how this is going to be played out in the next video, but right now we're just trying to figure out on how this bull market is going to completely end. So that's one scenario, and then there's one more scenario that I believe is very interesting, which is the ending diagonal scenario, which is how this move here is going to be turning into a corrective structure to the upside, where we find a little bit of a lagging kind of price action going to the upside, where we see a lot of overlaps, and that can be translated into what could be known as the ending diagonal. And this is a much more precarious structure in an ending diagonal. Wave 5 forms like a wedge-like structure or a wedge-like pattern. You guys are familiar with this, the ascending wedge or descending wedge, and that in itself is also translated into the Elliott Wave Theory. We utilize those simple patterns. But the most important thing is, are we going to see overlapping waves within the structure? And we don't have enough information right now, but it is still giving us a possibility that it could be the possibility here. And remember, this structure in itself for this ending diagonal, prices still go up, but the momentum is weakening. It's like a car that's running out of gas. It might go on forward for a little bit, but it's only a matter of time before it stops. And if it still moves up in the general direction of the trend, that's where the balance of the bulls and bears try to fight for each other. And that's psychologically, this is where things get really interesting in an ending diagonal pattern, because in an ending diagonal, investors are still optimistic, right? But there's a growing sense of unease, and that smart money starts exiting while retail investors like you and I are driven by hope and greed, and they keep buying. And then when the diagonal eventually breaks, or this trend line that you guys will eventually see as a normal market participant, the reversal will be swift and it'll be brutal, and that's when investors or retail investors will often start dumping on each other as well, causing a major chain reaction. So that is the market psychology essentially for that ending diagonal. But what's the market psychology for both of these scenarios? Well, the most important thing is that in both scenarios, wave 5 is driven by extreme optimism, like I said. And we've seen this in the past cycles, like I mentioned. The optimism is unsustainable. That's the key word here, ladies and gentlemen. And when the bubble pops, the psychology shifts dramatically, no matter what good news there may be. So euphoria turns into panic, and then panic turns into despair. And most importantly, this is where we see that classic capitulation phase, where investors sell at a loss just to get out of their positions. And of course, this is just one perspective, ladies and gentlemen. No one can predict the future with certainty. I mean, if history is any guide, the signs are pointing to a major top in 2025. I mean, we've had a 2 to 3 year bull market. I mean, there's not too much to ask for. I think right now it's just about maximizing your positions and trying to risk manage your positions as much as you can. And it's a collective thought. You know, the markets still want higher prices, but there's a little bit of unease here. And that's why also this ending diagonal pattern also could start coming into play. Whether it's a 5-wave impulse or this ending diagonal, the outcome is the same. A bubble pop and a brutal bear market will follow no matter what. Now, I know this might sound alarming, but the key takeaway for this is understanding these patterns and how they can help you prepare for what could be coming for a larger bear market. If you're invested in Bitcoin or other cryptocurrencies, it's crucial to have a plan. And this is just one plan. You got to take profits up along the way, set stop losses, and don't let greed cloud your judgment. Remember, the goal is to build wealth over the long term, not to get caught up in the hype. You know, we're all going to have different investment strategy approaches. You know, Michael Saylor, even though he's buying the top, that shouldn't be a sole reason on why you should be buying Bitcoin as well. I mean, you got to boil it down, ladies and gentlemen. Michael Saylor is already positioned, you know, around 50,000 at an average position. I think we'll even see a lower. I think he'll go back into the negative, in my opinion. But again, I think these people don't really understand or grasp how market psychology works and what these cycles can actually portray, because there is always going to be an ending to something. And the Elliott Wave Theory does a perfect job of an if in that scenario. And right now we have, if a wave 4 is in, then a wave 5 should be coming into play right now, right? I mean, it doesn't tell us an exact scenario on how and how far it will go, but there is enough clues along the way as you start building these pieces of puzzle, then it starts to fit into the larger macro structure, right? So we don't want that greed to cloud us, and the Elliott Wave Theory does a fantastic job of doing that. So whether this ending diagonal comes into play, whether it's just a normal 5-wave impulse to the upside for the 5th of the 5th, remember this all fits into that larger structure. Like I said, if we zoom back out and we go look into that 5th wave right here, we're looking for that 5th wave to conclude very soon, right? So again, that's how we're looking at it, ladies and gentlemen. I think in my opinion, we're going to be looking for some kind of 5th wave to the upside, and then eventually that will fit into the larger structure of how this macro wave 5 or 5-wave structure is going to be ending this wave 1 to the upside. And if we look at it even further, it doesn't matter, ladies and gentlemen. It is still extremely bullish no matter what, and no matter how we see it. We're still fixated on this cyclical approach on how these halvings work, and also where the structural 5-wave structures end, and also where the corrective pullbacks happen. Just look at it, ladies and gentlemen. This 345, 345, 345, and we worked ahead of schedule this time. We may be in another 345 to the upside, and this 5th wave now might be starting to come into conclusion pretty soon. Again, either this year or earliest of next year as well. And I think this is just kind of a journal. Let's see how this plays out. I mean, it's subject to change, but it has worked so nicely. And I think all the smart traders, in my opinion, are still going to be looking for a massive profit taking within the year, and there will be a massive chain reaction, in my opinion, that's going to be observed as a 3-wave structure of some sort to the downside, and that should lead us maybe down to 70%, 80%. The pullbacks have been getting a lot smaller. This specific pullback pattern back in 2021 was only a 77% move, but maybe we'll see a similar 70% as well, and the shallow pullbacks will occur more similarly smaller along the way. So hopefully that was helpful, ladies and gentlemen. Thank you very much. Remember, don't follow what the sheeps are doing. Make sure to have a plan. Make sure to have an exit plan, and this is just one of those ways, hopefully, that can help build on your thesis on when you can possibly exit the positions and also build more positions as well. You definitely want to be building your positions once you start seeing a 3-wave pullback on the macro, and that takes a lot of patience, ladies and gentlemen. If it's going to be a lesson or two that you're going to learn from the past bear markets, this is one way to prepare for it. Just be patient. If you got into the cycle too late, maybe you bought in around $60,000, $70,000 levels, maybe maximize your positions as much as you can on this last 5th wave, and then wait for the next cycle to occur. I mean, it's going to happen no matter what, is what I'm saying. Then no matter what, we're going to see a large pullback, and that can be the next opportunity to make the most profitable wave on the way up, okay? Hopefully that was helpful, ladies and gentlemen. Thank you very much. I'll see you guys in the next video. Please make sure to hit that like button, subscribe to the channel if you would like to see more content like this with a more fundamental approach. Thank you very much. I'll see you guys in the next video. Have a fantastic rest of the week. Bye-bye.